Good day, happy March to every single broker, to every single mortgage broker. Good afternoon, Brokers Playbook Nation. And we have a very special show lined up today. I was able to pry Mr. Phil Soper, the Phil Soper, away from his duties for an hour this afternoon for him to share some insight across all our channels with the absolute hope that it lands some good insight inside your business and helps your mindset progress. Um, all I want to do is give a massive welcome to a good friend of the REC, which is my real estate organization. A massive welcome from the Brokers Playbook family, which is this podcast, and to a friend, from a friend to a friend personally. Phil, so amazing to have you on the show, pal. Welcome.
Thanks for having me, Simeon. I love what you're doing, reaching out to people, not just in your trading area, but across the country and across the continent, with your message of education and positivity. It's really great to see.
And I think if you look at your very own business and what you do for Royal LePage, you do the same. So it is you cannot have a high level view if you're stuck in one place.
I
So
agree. I agree.
so we have to move around and we have to get the insight of people like yourself, of the people that you get counsel from leaders in the political arena of our business, meaning the governing bodies, like having Tim come on to discuss what provincially we're doing, to line up, the executive and the top brass at the Canadian real estate level to understand what they're doing and what they see. So any and all of those things, I think, contribute into a well-informed agent, both in the mortgage and real estate industry, and gives them the unique ability to give advice from the highest level right down to practical mechanical movements of how to negotiate in a certain market while remembering what the entire point of this exercise is, which is to help a fellow Canadian make their best and highest move as smoothly and as professionally as possible.
Amen. Amen.
Amen to that. Um, we are going to have our co-host Laura joining us shortly, so she's going to pop in on us, and when she does, maybe we'll find a way to prank her. But until then, we got some serious. We got That's what happens when you take meetings before the podcast.
You got it. You got it. Business must go on.
Business must go on. That's for sure. I want to really start with the highest level item, and I think one that is burning across our clients all over the place. I think our brothers and sisters in the mortgage industry see it even maybe 10,000 times more than us. They've always been getting rate shopped their entire careers, and people always seem to think that the most important thing in a mortgage is the rate. When we clearly know a mortgage and its terms can fluctuate so much that a rate is only a single component. But right now, the media is sizzling. The ad campaigns from the big five banks to private money. We're talking about the big banks putting money on the street at 1.4, 1.5, 1.7. About 4 months ago, I personally rewrote all my investment property mortgages at under 2%. Excuse me. I got four or five of them at 1.7 to 1.9. And the last one, they're like, Simeon, we just can't do that anymore. How's 2.15? I said, oh, I'm so disappointed, but sure, I'll take it. So I literally gained a couple $1,000s a month in cash flow as a result of doing nothing more during a time of a pandemic crisis than rewriting my mortgages. So the opportunity to create wealth in this market for ourselves as investors and professionals, for our clients, is it's a record. It's a historical record. So I'm going to ask you, Phil, because of who you are and what you do for a living and the people that you associate with, there has to be more conversation and maybe a better understanding of how did this happen. So why in the middle of a pandemic or during let's call it a catastrophic economic event, rates go down. The bond yields. How does this thing play? So how did we get here? Is my question to you. And what do we anticipate? How long do we have to take advantage of this and get our clients on board on this?
Big questions, really big questions. Maybe a little bit of context. It's common in an economic crisis, in a recession, for policymakers, call it central banks, the Bank of Canada, Bank of England, European Bank, Federal Reserve in the US, to put stimulus into the marketplace. And they do that through monetary policy. They reduce the target rates, at which triggers the cost of capital for financial institutions themselves, and through other factors such as what we sometimes call printing money.
Yes.
They control, or they influence, I should say, retail borrowing rates and business to business borrowing rates.
And
you want
the economy afloat. I
Yeah.
understand this whole printing money thing, which means getting the stimulus out. All these billions or trillions of dollars. This is, and I know it has a name.
quantitative easing.
Yes, quantitative easing. It is to ensure that the market continues to operate in a case where it otherwise wouldn't, either driving production to a halt or causing an instant ultra inflation environment.
Right. When people focus on debt as a problem, but for an economy, when a person borrows to purchase goods and services, you're creating income for other people. And it is, in a contemporary economy, you need the free flow of capital. You need borrowing to occur so people can get into houses, get into cars. What you don't like to see is large levels of revolving credit.
That's right.
Like credit card debt or even lines of credit that are being used for in-period consumption. Yeah. The reason that call it the calm, the thoughtful leaders, like, say, a minister of finance or the head of the Bank of Canada, don't get too worked up, or over the last decade have not gotten too worked up over the level of indebtedness for Canadians, for example, is a lot of it is secured to appreciating assets. In other words, it's tied to real property. And that is far, far preferable than debt that is tied to credit cards that went to spend money where there's no asset. The money's gone. But back to your core question. When there's a recession, policymakers respond by stimulating spending, stimulating borrowing, because what they really fear is that everybody hunkers down, that everybody sort of in a Trumparian world where everybody becomes insular. They back into their corner and they say, it's all about me. I'm going to hoard my gold. I'm not going to let anybody else have it. I'm not going to do anything. And then what you find is trade stops, job losses escalate, and the recovery is really, really difficult. If you look back to the 2008, 2009 Great Recession, the financial crisis, what caused such prolonged grief in the United States, particularly the United States housing industry, was people stopped being able to borrow to buy real property. They couldn't get a mortgage.
That's right.
Defaults rose. Banks, because the financial system was at fault, banks were unable to lend, and the free flow of capital stopped. And it took 6 years to dig themselves out of that hole.
And we're referring to the 2008 crisis, the banking crisis, which led to the demise of Fannie Mae and Freddie Mac.
Exactly.
So those are the equivalents to those newer in the business. or they may not be too familiar with American housing policy. Those two institutions are the equivalent, or sort of the equivalent per se, of our CMHC, of our title insurance companies. They kind of do that same function of insuring the housing market, and that was called the subprime mortgage collapse, which is very different than putting a halt into the marketplace now. And what Phil was, so we're going to do a quick reset because Laura's actually here with us. We're going to let her into the room, but I also don't want to stop the flow of the conversation. So where I want to go from here is we'll do a quick introduction and bring Laura in, but I do want to speak to the good debt versus bad debt that you mentioned, which is retail debt versus mortgage debt, or an appreciating assets carrying cost in this case, and how that ties in to, of course, these low interest rates that are meant to keep the market up and running to make sure that people don't hunker down and stop the flow of money. So I'll just let Laura in here quickly. Phil, thank you so very, very much for really kind of guiding us to understand the high level of how interest rates and why I suppose they lower them to stimulate and keep that economy going. And now we're truly seeing a red hot market. So is this stimulus something that is driving a frenzy of demand, or what is driving this kind of cross-country phenomenon of buyers competing for homes, of buyers, of brokers, like literally like mortgage brokers cannot keep up with the pace? Like they're taking in applications, and Laura can speak to that. And welcome back, Laura. It's nice to see you back here. And you can maybe speak to what you're seeing on the ground. But Phil, how long are these sub 2% mortgages going to last? And how is it possible that what's meant to do stimulus is now driving what a lot of people might even think is unhealthy appreciation in the marketplace?
Yeah, lots of questions. Maybe dealing with the high level question of where are interest rates going?
Yeah.
Nobody really knows, but I'll give you my opinion. I think the recent bump in bond rates, which impact our fixed, like our most popular mortgage product, the 5-year fix. But one of the things that might, a little bit of a segue might do is ignite more interest in shorter term variable rate mortgages, which will be much impacted to a much later, lesser degree. They were a very popular product back in the 2000s after the financial crisis. There was, the combination of very low interest rates and conservatism born of a big crisis had made the 5-year fix a very, very popular product. There might be a little bit of a pendulum swing. It doesn't surprise me that we've seen some movement off the bottom. Remember, we were at an all-time historical low as far as the retail cost of a mortgage.
Yeah.
And things are better. We just got results yesterday on the Canadian economy. In the fourth quarter, the Canadian economy grew by 9.6%.
This year?
Huge.
Yes.
And that's an annualized rate in the fourth quarter. Overall, in 2020, the economy still shrunk because we shut it down in the spring and early summer. But we were expecting sort of a bounce back in the 5 to 7% range. It's almost 10%. That is massive. And the early indicators in January and February are that we're way ahead. And I'm not talking real estate here. I'm talking the overall Canadian economy.
And Phil, if you can, the way I want you to explain this, and this is not a client-facing or public-facing podcast. A lot of our clients might see it, and that's great. What I'm asking for advice from you. How do I explain to my client in a beneficial way for them to understand why we are okay, or we're going to be okay,
sure.
Or if we're not going to be okay, let us know that too. What I'm saying.
So there's two things, Simeon. I see two things clients to be worried about from the financial perspective. One would be the cost of money, because most people buy property based on monthly carrying costs. And the second would be the sticker price on the home itself. And we've got upward pressure on both because the economy is recovering, which is a good thing. I think the recent swing in bond rates, which has put upward pressure on those 5-year fixed mortgages that are so popular, is a little bit of overshooting in terms of predicting where the market's going to go. I personally, in this personal opinion, don't think inflation's going to be an issue in 2021 and 22. Why? Because we still have over 9% of the population out of work. When you're in the real estate or the mortgage industry, you can be forgiven for forgetting that there is a huge chunk of Canadians that are still in desperate state.
Yeah, and I mean, to count like the people that are on contract and part-time, they're, making a fraction of what they made before. So there's a huge portion of people that are hurting, but for the people that had a cushion, that have home equity, they're snapping up properties with these rock bottom rates. So, we've seen a lot of demand in, of course, the real estate market. Something I've noticed in terms of the trends in mortgage types people are taking on, there's been a preference for the variable. If you look at what's cheaper, variable has outperformed fixed solidly for the last 40 years. Yeah. Of course, it's iffy. You have to have a bit of a risk tolerance, but the data is clear that it's cheaper. And I think the biggest thing to consider is that Canadians break their mortgage. Even if they get a 5-year term, they are likely to break it after year 3. And the variable rate prepayment penalties are much more favorable than fixed.
I have a quick question for you, Laura. And you're at the helm of one of, actually Canada's largest private mortgage house. You guys put a lot of private money on the street, a lot of B lending, and of course, hundreds or thousands of A lending mortgages. So anecdotally, from what crosses your desk, with the amount of agents that you have, I think you can give us a really good up to the minute standpoint. Are you seeing, so what I'm like, I did an interview with the Globe yesterday, and I'll talk about what I cover. I'm seeing a return confidence of Torontonian investors and end users alike. They are not looking at the pandemic scared anymore. I wanted to hear from Phil today the invaluable advice that he already gave on how to present, for example, the 9.6 economic result that came out yesterday that was all over the papers, how to present it to my client appropriately. And you delivered that for me, Phil. Thank you. Now, I am seeing, and I am telling you because I transact every day, that my clients are no longer scared. They're actually exhausted. They want to move on, and they're making moves. Yeah. Laura, can you confirm that from your end? Are you still hearing, is the economy going to collapse? Because I'm not.
I would say that that's more or less been assuaged. I think people are looking to go out and spend their money again. Really, it's like, give me something to spend my money on.
No, but from the big move perspective, meaning like refinancing. So let's say I bought a house 4 years ago, $600K. It's worth $1 million now. Am I refinancing to buy more real estate? Are you doing?
I think that brokers and real estate agents need to jump on the opportunity that people are dumping their investment properties, right? I think that the condo prices finally went down, and it's given some opportunity for people to enter the market or snap up more investment properties. And I think as a real estate broker or a mortgage broker, you should be dipping into that book of business that you already have and say, hey, what's up? I've got some great opportunities for investment right now. Why don't we free up some of your equity and make it happen?
So my partner, Jazz Phil, which you know very well, Jazz has coined the term in the last 8 months that downtown Toronto real estate's on sale for the first time in his lifetime.
Touché.
But having that 5 to 8% dip in prices, it's the closest you'll ever get to a sale as far as 416 real estate is concerned. And that window is now closing quickly. So
it's interesting. We see we see this more in Vancouver than Toronto. Homes are a lot more expensive. It's a much smaller market, probably about 40% the size,
Yeah.
the lower mainland to the GTA, and much twitchier. And so even small corrections, like 2012, we had a small correction, and you see a downtick in activity levels, prices flatten, and then in 13 you see a rush of buyers into the market. Typically younger buyers, typically people who have been thinking, God, I'll never own a home in Toronto or Vancouver. Same in 17 with the introduction of some provincial level
The stress
regs.
test was a nightmare.
And then the stress test in 18.
But were you referring to the foreign tax and vacancy, the vacant property?
Yeah, vacant property, foreign tax. So in these expensive markets, and by the way, it's similar in the Bay Area, outside of San Francisco, or encompassing San Francisco. It's similar in Mumbai in India, in very high value residential real estate areas. You do get this twitchiness to the market, and when there is a slowdown, when there is a pause in appreciation, or even a dip like we've experienced in downtown properties, particularly condo properties, you see a rush. You'll see a rush for the door. And I think, and you saw this, Simeon, last week in the research we released on the largest surge in 25 to 35-year-old buying in Canadian history. A big portion of that activity was investors selling to first-time homebuyers, and first-time homebuyers buying from, say, older millennials at the top of that range. So there was a huge volume of activity. And I think what we actually saw was a material uptick in the Canadian home ownership rate, which is big news, because we were sitting at, say, 69%. We may actually crack that 70% number for the first time. And it's good news, because those people are now in our clientele for their whole lives. Once people are homeowners, they rarely become non-homeowners.
That's right.
Indeed.
And a quick question for you, Phil. The report, because that's a massive Royal LePage publication that gets put together with a lot of hundreds of man hours behind it and research. Is that available to the public, or is that an industry publication?
It is available to the public. Royal LePage Media Room Reports and Surveys, but just Google Royal LePage Media Room. You'll see a wealth of data, as you know, Simeon. But for Lauren, your listeners' view, we're a Brookfield company, and we have subsidiaries in my business that do property valuation for banks and insurance companies.
It's great
we
data.
Have data analytics businesses. So we take all of that information, we distill it, and we try to add value back to Canadians.
I think what we'll do out of this Brokers Playbook, and this goes to the entire community, our amazing Brokers Playbook community, which is now in the thousands, is we're going to get this report to the entire email
Excellent.
list, as well as the link on the socials. So if anybody wants to download it, doesn't matter what brokerage you're with. This is never a flag show. It has nothing to do with it. This is good data, and it's very valuable for us as brokers to have this data, and even more important, to share it with our clients. So feel free to share the data, package it up, and get it to your clients to make your life easier.
I love that, Simeon. And during the pandemic, as you know, being a big company, we had resources that smaller companies didn't have. So we did put together the WorkSafe Royal LePage program in the spring of 2020. I remember getting a call from our manager of the Windsor, Ontario region. And he said, listen, my peers in the industry, or my competitors, but my peers, my colleagues, they don't have anything like this. Can we share?
Yeah, sure.
And we made the decision right from the very beginning. This is about keeping Canadians safe. It's about keeping everybody safe, our mortgage partners, our other realtors, our staff, administrators. And we just say, absolutely, consider this. And you saw this with the big publications, right? Like the Star and the Globe and Mail, New York Times.
Yeah,
LA
they had
Times.
free coronavirus.
When it came around coronavirus, paywalls fell, and it was all about the bigger picture, about helping each other. So I applaud you for that language, because that's exactly. And you know what? It comes back. It pays you back in spades when people say, Laura, Simeon, they did the right thing. They just wanted to help people, help Canadians. I'm going to give them my business.
Phil, this whole entire infrastructure is as a result of, there is no other way for us to truly show our gratitude for the blessings we've already received. So I honestly, if not a single more blessing came to me, I would be a very happy man.
Well, I'm sure you'll have many more, my friend.
Blessings to that. So
there's just a great line to sum this up. It's that information is the new currency.
Yes.
And it's just one of those things, and it's free. That's the best part of it. And it to further that and really just sort of place it within the framework of brokers and real estate agents and how you can use this. Clients don't want to be sold. They want to be told. You need to tell your small business owner clients about the available government programs when you come across them. It really is important that you work in research and knowledge into your core practice. Spend an hour a week minimum going through reports like the one Royal LePage has put together, PricewaterhouseCooper, Property Market Outlook, whatever you want to do, right? I spend a good 1, 2, 3 hours on Sundays going through all these things so that I can then package it and have something interesting to say to basically anyone I talk to and add value. So
you need to add value. It's adding value. Good job.
Here. Great advice.
I'm going to make a quick switch to the second most important discussion point. I think that's on a lot of our industry's minds, which is the immigration, the universities opening up, seeing those foreign students coming in from Europe.
I'm back.
Opening the doors to our amazing African students that make a massive population up in many of the provinces' universities. So we literally have, our airports are shuttered. A target that was set a year prior to the pandemic of 400,000 new Canadians a year is not happening due to the pandemic. What is our take on when is it going to reopen? And I know you're not a health professional, but what do you hear or foresee from what you do know? And we're going to talk a little bit about I'm definitely going to speak to the short-term impact of not seeing the students downtown and the immigrants. But from your perspective, Phil, what does the foreign investor mean to the Canadian economy? What does the foreign student mean to the Canadian economy and to our culture and to our environment?
Yeah. Well, listen, big questions and excellent questions, Simeon. I divided into two buckets. I'll speak to each briefly. First would be temporary residents, foreign students being the biggest part of that. And the second being new Canadians. Call it immigrants that are coming in this year or recently. So on the foreign student side, or the temporary residents, they are a critical part to the economy. They represent, first of all, the numbers are staggering. People shake their head when they hear the numbers. We typically have almost 850,000 foreign students in Canada. It ranks us as number 3 in the entire world.
That's like 5% of our population.
Isn't that stunning?
What?
And they contribute $21 billion a year, which is massive to the economy. And they haven't been here. I sit on the Ryerson University board, and the hurt that our our educational institutions are feeling with their absence is huge, because they pay very high tuition fees, much higher than our
oh yeah, for U of T, it's like 100,000 to come as a foreign student versus 8,000 a year as a local.
it typically would range, depending on the program, maybe 4 times more. And by the way, the rationale is sound. For if we're sending our kids to school, we paid taxes through our whole life. Our education, great educational institutions in Canada are all public, and they're supported by us. And so, if you're a foreign student, you haven't been paying your whole life. So
Sure.
you have to pay more. But it's very important for the institutions. It's also really important for our property investors. A lot of great investors provide housing for those 850,000 people that have been gone. So that's one of the challenges. I know you have some detail on how it's impacted the GTA, Simeon. The other side is immigration. And we were in the low threes, 320, 330,000, chugging along, which is, less than 1% of the Canadian population, but it's pretty important part of the Canadian economic story. And it just hit 2020, it fell off a cliff with borders closing and such. We're going to make that up. They've already reopened the doors. The various federal departments are a little slow in getting the necessary permits out to people to get them back, but they're coming, and they'll be arriving every month. There'll be more new Canadians, and our research shows in the first 3 years that they're in Canada, they rent, and they tend to live in big cities, and they tend to rent condominiums. That's the nature of the beast. And then after that time, by about 7 years, many of them have relocated to detached homes in our suburbs and things across the country. And the home ownership rate of new Canadians actually eclipses that of people born in Canada. It's about 72%. So owning a piece of the rock may have been something. I used to live in India. I lived there for a year on assignment. Yeah, and people didn't own their homes unless you were rich. So to come to a place like Canada where you could actually be a property owner, to own your home, it's very important, which is why you see it as such an emotional and important goal. And in markets, especially secondary markets, you think, oh, Toronto, Vancouver, that's where they have the biggest impact. Well, we have massive population. So you bring 100,000 people in to a 5 million person city. Yeah. Where it really hits is in places like London, Ontario.
Yeah.
Regina, Saskatchewan, where our research shows 40 to 45% of the transactions this past decade can be new Canadians, people who've been here less than 7 years. So
do you think that's because of the lower home value?
Well, that's part of it. Very good point, Laura. And part of it is just because the base is so small, right? So, we have more people in Markham than in Regina and Saskatoon put together, right? So we have more agents, Simeon, in your office, that one office in Don Mills, than we have in the entire province of Saskatchewan, and we're the number one brokerage in Saskatchewan. So that's one office in Toronto. So just to put numbers in perspective,
not a lot of movement in Saskatchewan.
Although, and I know that's not what we're here to talk about, I do see a resurgence of small town Canada. And I mean Saskatchewan, Saskatoon, Moncton, St. John, coast to coast.
Well, just to give a big plug to our good friend Tim Hudak, his entire workload, focus, and policy that he's working on right now, as he finished saving us from the draconian taxes that we were engaged in for decades. He finished, he put us with the ability to get our personal real estate corporations, and that was huge. He's now moved on to working on framework surrounding the rebuilding of rural Ontario, with trying to promote an agenda of growth incentives to get people to stop thinking that the city is the only solution for jobs in life, and that quality of life, work, and happiness can be found outside of Toronto, for lack of a better word, and he can be found all over Ontario given the right context and the right opportunities.
Wouldn't it be cool to see Tim, if Premier Ford wants to hang up his skates after a pretty tough pandemic level term, to have him back in politics leading the province? That'd be
I
pretty
would
cool.
love nothing more. I would love nothing more. I'm just such a huge fan of that man. So he's just a great guy.
I don't know. I think real estate's been pretty cushy after politics. It might be hard getting him back.
Yeah.
Oh, but I think it may be in his blood.
Yes.
Politicians are a different
or maybe
breed.
Phil knows something we don't, and I like it.
Yeah.
Just observation.
I don't think I've got it in me for politics.
That is a very politically driven. That's a very politically driven campaign for Aria. I will agree.
Exactly.
Going back to the impact of foreign students, and I wanted to share something anecdotally. My group, because we're a very investor-focused group, we control over 400 rental doors in the downtown market.
Wow.
For our portfolio, which is not 400, but with the help of our clients, we run a property management software with over 400 doors in it. With that being said, we were not only shocked at the number, just like everybody here should be shocked with the number of foreign students that Phil mentioned.
Yes.
We were surprised to see that 25% of our portfolio depended directly.
No kidding, huh? That's quite fascinating.
On students not from the city.
Wow. That is really cool.
Of the 25%, half of them were not from the country.
That's
so
huge.
Half of them went back to Barrie, half of them went back to Thunder Bay, to Red Deer, Alberta, to Vancouver, to whatever. The other half is back in China, back in India, back in Northern Africa, back in Germany, etc., etc., etc. So the impact has been significant. We felt it just direct. So not as agents, forget as agents. Obviously, we know what happened. Rents down 15 to 20%, prices down 7 to 12%. That's besides the point, that we know for multiple reasons. But as an investor now, and as a broker, I felt the impact directly from a transactional level. And now I felt my cash flow get smacked right in the face because I wasn't able to replace those doors with the same rent. So, for example, I have an 8-plex on Pembroke alongside, like, we have a component of it. We have 4 partners on the project. And our building, literally 6 out of 8 doors were Ryerson students. If anybody knows where Pembroke is, we're talking about Jarvis and Dundas.
Right in the heart.
Right in the heart. Like, it's a 7-minute walk to Ryerson front door. But
now, Simeon,
out of 8.
That is amazing. Did you consider selling part of your portfolio? And second part of the question, do you do any short-term rental, Airbnb style rental?
We don't, especially with a turnaround in laws governing the Airbnb.
Yeah. Toronto, City of Toronto made Airbnb like impossible.
It's that. Listen, guys, if you wanted to do Airbnb, you can still do Airbnb. The enforcement is non-existent. The rules are loose. It's literally like, I'm going to use the word because it's the truth. It's a shit show. But as far as doing it, I have no interest in enforcement, policy, bylaw nonsense. I have no interest in selling a single property if I don't have to.
Good for you.
The reason
and bad timing, like the market's flooded with these things right now.
Let me
That's
just.
a very good point.
But
don't be the sell low and buy high guy.
No.
So
hang on to your shirt, people.
I'm not an emotional investor. I've told my entire client base to do the same. We have a 99.9% compliant audience that listens and understands, that are savvy enough to understand. I also believe, so no matter what you were to say today, Phil, whatever the Globe and Mail says tomorrow, and everybody, I have my own opinions, and I think exactly what I said last year in July, which actually happened the minute it opened. I think the minute that Pearson opens, I think we're going to see a massive spike in rents, in volume, in rent appreciation. I think Toronto is going to see prices and hit highs that are going to be on the record for years to come.
It's demographically, the Golden Horseshoe has a beautiful 15 years ahead of it. If you just look at the age when people buy and sell property in their lifespans, and the age of our of our buyers over the next decade. It's a golden era of demand for housing, and it's also, on the other side of that, it's a huge and difficult challenge for policymakers to find enough roofs to house our population.
Phil, I will not.
That's going to be what we're talking about. Yeah,
I will not speak this way to my clients, this bullish. I will not speak this way when I give my opinion to the media, this bullish ever, because I will not go on record as advice to clients this way, but advice to me. I'm talking about my personal portfolio. I know exactly what's in store for the GTA because it actually has, if you truly think about it, it has no choice. You cannot keep the market closed forever. And in the market that, like, I'm also in the restaurant business. I'm also in the investment business. So I have multiple different revenue streams that have been affected very differently.
Yeah.
No kidding.
And I know.
I bet you're glad you're not just in the restaurant business.
100%. 100%. But at the end of the day, the only thing that can happen now is for it to go. You cannot force it closed any more than you have. It's closed.
Yeah.
It's only my doors.
I heard the governor of Texas today. Now they're in a very different state, and they also have a much higher tolerance for dead people than we do.
Yes,
but
no shit.
But he said, we're wide open, no more restrictions. Everything this morning, the public health officials.
Nothing has changed. Like, you guys aren't vaccinated.
It's the responsibility is set.
Oh man.
Yes.
It's like, I've decided that the pandemic is over. I don't think it's done with you though.
Oh man.
I have one last question for Phil, and we'll close this up. Phil, you're sitting at the top of Canada's biggest real estate agency. You're responsible for the actions of 20,000 brokers across the country.
Indeed.
That's a scary thought, Simeon.
It's a scary thought indeed. What I want from you is I want your message to ring across every Royal LePager, as I am one, but I also want your message to ring across every Remaxer, every Century 21er, every single mortgage broker in the country. I want you to tell me, what do you expect your real estate, your mortgage professionals, your housing industry pros? What is your expectation of their actions during a time of crisis like this, or always, even perhaps? Obviously, we can speak to professionalism and integrity, but above and beyond that, the leadership during a pandemic as people who have the keys to the biggest asset class in the country. What is your expectation and your vision for us as industry professionals, and how does that scrub against what you're actually seeing? Are you happy with the industry? What do you see? Okay.
Well, listen, great way to wrap up, by the way. You've done a nice job of drilling down during the conversation. Let me start with the last part first, and then I can think of three things that I'd love to see the industry, our people and the industry do. So I've been very, very proud of the way professionals in our industry have behaved, the way they've performed over the past year. It has been nothing short of remarkable. If we were to do a survey of Canadian citizens right now, there would be a material increase in the way they view real estate professionals, because they have stepped up. They have worked hard to make things work in untenable situation, unprecedented. They've listened to leadership and they have executed really well. Obviously, it's a bell curve, and you have, the superstars like your team, the Royal LePage Rec team, superstars, and you guys hit the 1 percentile right at the very top of the industry. And there are those, we had, but remarkably few situations where people did just really stupid and selfish things, but remarkably few. How, Laura, did you
I've
You
noticed
agree?
that the resilience was surprising. I think there was a small few that just kept their heads down and said, okay, I'm on break. But for any of the ambitious types, they actually took this opportunity to double down and said, okay, well, while you guys are resting, I'm going to go double time and I'm going to really show that I'm there for my clients. And I think that, oftentimes tragedy brings people closer together, and there's been a larger degree of collaboration and cooperation, which is unprecedented in this generally competitive industry.
Here, here. So 3 things. First, number one, we can't forget that we're still in the throes of a global and a national pandemic.
Yes.
And things are going to get better every week. The weather's going to get better. The number of vaccinations is going to get better, and the number of infections is going to fall. And the temptation would be to let our guard down. We can't do that. We have to keep our clients safe, and we have to keep each other safe. So that'd be number one. Number two would be, this is a very unbalanced real estate market. And in unbalanced real estate markets, there's tends to be winners and losers. Right now, there are a lot of losers on the buying side. They're disappointed. They're seeing that window starting to close. Their dream of home ownership that they thought was right in their grasp, starting to slip away when house prices start to escalate. It's really critically important for our people to counsel their clients, particularly their buyer clients, and most sellers are buyers, right? On what to expect, to set their expectations, and to be a shoulder to cry on, to really emphasize that they're there for them. They're going to help them through this. If this isn't the deal that they consummate, the next one will be their home. And we just got to keep working. We've got to keep our heads down and keep going to be a counselor, because there are going to be some very, very sad people out there. Some very happy people, but some sad people. And that's what happens in unbalanced markets.
But even the happy ones, Phil, even the happy ones, are they? So we have to use caution, because if you're going to win at all costs to get into that home, but you're not careful, strategic, and methodical, and are you going to be staying in this home for a long time to ensure that the price you paid for the home is going to stabilize? And it's not going to be that in 6 months you need to sell and all of a sudden you're in a negative equity position. That we saw these things happen before.
Yeah.
So even the winners need to heed caution.
Fair enough. Fair enough. I do say to people, and I'm sure you guys have said this too, don't get too hung up on this being a huge decision. Yes, it's expensive to move. Yes, it's a big deal and we all hate packing and moving. But if you don't like it, move again. And if you use the last 75 years as a benchmark, Canadian home prices have risen between 5 and 6% a year. So you're going to cover your transactional costs in a year, or in this market in 3 months. So if you don't like it, move again. And by the way, moving next time before you've accumulated a lot of stuff is going to be a lot easier than this time. So don't get too hung up on it, and don't be the risk averse person that never takes the step outside of your box. Number 3, just to wrap up, the 3 would be, don't get used to it. Because as much as this last 11 months has been crazy, and it's resulted in one of the great growth surges in our industry, it will flatten. We will see a change. So resilience is so critically important when you're an entrepreneur like a realtor or a mortgage broker. You've got to accept that things will change, that whatever is today is temporary, and we're going to make the most of it and embrace, if you can, the change that's coming, because it will change. It's not going to be bad. In the long term, I think this industry is absolutely one of the best you could possibly choose to hang your hat and grow a career. But it's not going to stay this way forever. So there would be my sort of 3 thoughts on your question.
Mr. Soper, I have an infinite amount of gratitude for your time.
Gosh, great to meet you, Laura.
It's been a
Face to
pleasure.
face at one of Simeon's great client events. God, those are fun. I can hardly wait till you get those
I
back
know.
online, buddy.
We'll be back up and running, buddy. Don't you
Any
worry.
day now.
It helps. It helps when you're a leading realtor who's also a leading restaurateur.
Yes.
What a good combo.
It actually does help.
Secret Garden.
So I will say this. I just met one of the best mixologists in the city.
Oh,
Nice.
And he's going to be designing
Nice.
the new cocktails in one of my newest ventures coming up. So there's
that is awesome.
There's going to be some delicious
It's a
cocktails
golden
coming up.
age for real estate and for mixology.
And for mixology. I hope you
Yeah.
have a flaming cocktail.
Oh,
Laura, that would fit your personality, and I just met you.
What would be the chances that a Greek, a flaming cheese eating Greek, is not going to have a flaming drink? You can bet on it, Laura.
Well, there you go. There you go. Can hardly wait.
A quick plug for an upcoming session coming up, guys. We're going to have the president of the CFIB, that's the Canadian Federation of Independent Business, going to be joining us, I'm hoping within the next 30 to 60 days. So look out for that. And we have some leading heads of the Canadian mortgage industry joining us in the next couple of weeks. So from everyone, we are in Toronto. We were joined by the amazing Phil Soper and my absolutely stunning, smart, diversity champion, a champion for women and everything that they do in leadership, Miss Laura Martin. Laura, thank you for everything you continue to do on a daily basis. Phil, thank you for your leadership and everything you do for our industry. From Toronto and Brokers Playbook, so long.
Take care,
So-
everybody.